Thank you for watching this video. Today we will be doing technical analysis on the S&P 500 for the week ending Friday, October 22nd, 2021. And for this analysis, we will be using stockcharts.com. That is the charting service that I use and pay for, and I will leave a link to their site in the description box below this video. My name is Rodney Constable. I have over 30 years of investing experience, including over 25 years of experience trading stocks and options. I am a former financial advisor, a former vice president of a major mutual fund company, and I am the developer and president of Simple Market Signals at simplemarketsignals.com. Simple Market Signals is a proprietary trend direction and risk management model. We have several charts that we will be looking at today. We have an hourly chart, a daily chart, but let's start with the weekly chart so we can kind of see what has happened for the week, and then we will get to the shorter time frame charts here in just a couple of minutes. This is a weekly chart of the S&P 500 that goes back a little over 1 year, so back to September of 2020. Gives us some good perspective there. Again, each candlestick on this chart does represent 1 week of trading. The moving averages, simple moving averages, we have the green one, which is the 10-week, the orange one, the 20-week, and the blue one is the 40-week moving average. And we can see here for the week, the S&P 500 had a great week, up 1.64%. We closed at 4544.90. That is a new all-time weekly closing high on the S&P 500 right there. A couple other things I want to point out. A couple of weeks ago here, 4 weeks back, we had a close barely beneath the 20-week moving average. And I do want to point out that that's the first time and the only time since October of 2020, bottom left where my cursor is circling, where we have closed beneath this 20-week moving average. Of course, the 20-week is pretty equivalent, not exact, but pretty equivalent to the 100-day moving average. So, a little bit of a pullback here, and then, just right back up to new all-time highs. So I know there are a lot of people out there, guys, a lot of videos, and I hope that you've seen that these people have discredited themselves. The market's going to crash, the market's going to crash, the market's going to crash. And you can see that here we are, at new all-time highs. All right, so the next chart we're going to look at is an hourly candlestick chart of the S&P 500. This one goes back to September 23rd. The solid blue line here, 4430, we'll talk about that here in just a second. But I do want to point out in the early part of October, we had, and you can really clearly see this on the hourly chart here, we had an inverted head and shoulders reversal pattern, broke the neckline here that you can see, and that pushed us up to this 4430 line. And we'll talk about the 4430 line again in the next chart as well. But I just want to point out here, this 4430 line for months has been an extremely important support and resistance level. Now, we got right up to the 4430 level, as you can see, on October 7th, and then got rejected for a few days. And this allowed us to kind of build up some energy. And then finally, last Thursday, a week ago, on October 14th, you can see really nice volume to the upside, and that shot us up, and we had our first hourly close above 4430 since clear back on September 27th. And you go back and check last Friday's video, guys. I pointed out that I felt like, the video I did on the 15th, and go back and fact check me here. I pointed out that, this action was very bullish and, could very likely send the market higher. And I pointed that out a week ago. Well, you can see what has happened. This week, we have moved to new all-time highs. And you can see that today, on Friday the 22nd, we had our new all-time intraday high of 45.59.67 right here today on Friday the 22nd. So we have a new all-time weekly closing high. We have a new all-time intraday high, and we'll talk about a daily high here in just a second. But I really want to stress the importance of this 4430 line, and again, we'll look at that here on the daily chart in just a minute. But really nice pattern here, guys, and this is what's so important about, getting good at technical analysis, using the technicals, and paying attention to the stock market, really at the exclusion of everything else. And that's where I think a lot of people really struggle. They get caught up in, negative news headlines, politics, economic information. Guys, I cannot stress this enough, and I've been doing this for a long, long time. And if you want to know my financial services background, there'll be a video linked in the description box below this video where you can go look at that. But I've been at this for decades. I am not an amateur, and I don't have all the answers by any stretch of the imagination, guys. But I just want to, I just want to phrase this way so you understand where I'm coming from. The stock market and the economy are not the same thing. Okay, we don't invest in the economy; we invest in the stock market. So take it for what it's worth. But that's something to really, really remember and understand. Okay. Don't invest in the economy. We invest in this in the stock market. Therefore, we need to pay attention to what the stock market is telling us, really at the exclusion of everything else. Now, here's that 4430 line again. This is a daily candlestick chart of the S&P 500. Goes back to the latter part of June, as you can see here. Well, we first got up to this 4430 level right here in July and got rejected, and then finally got above it, and you can see then fell below it, got back above it. But you can see this has been an extremely important level, and right here, that is this right here, okay? So, but this is, of course, on a daily chart, and you can see we got right up on this wick of this candle, right up to that level, got rejected, pulled back, and finally shot through it last week. And look at this really nice, I mean, just almost parabolic trading this week. Slightly negative here on Friday after 1, 2, 3, 4, 5, 6, 7 really strong days in the stock market, especially those 6 days there. So not surprising at all that we had a slight pullback, just 11 basis points here on Friday the 22nd. But we are clearly, here's the 50-day moving average, and the orange line is the 100-day. Where on that previous chart we were looking at weeklies, but now the green line is the 50 and the orange line is the 100-day. And you can see we had just a few days of trading beneath the 100-day moving average before running right back up and setting new all-time highs. Here is the all-time daily high here on Thursday, the 21st. Had a slight pullback again, just 11 basis points pullback from yesterday's all-time daily closing high. But again, on Friday here, the 22nd, we did hit a new all-time intraday high of 45.59.67. So, the next few weeks will be critical. It wouldn't be surprising to have a few days of a pullback here. But, guys, we're trading well above the 50. Just keep in mind this 4430 level, and you can see the 4430 is just below the 50-day moving average. So, as long as we stay above the 50 and above this 4430 line, I think it's very possible that we could rally into the end of the year, obviously with pullbacks along the way. But it shouldn't, at this point, surprise us if the market goes up several more percentage points between now and the end of the year. Who knows what that looks like? Again, I'm not trying to predict the future. I'm just using technical analysis. But, anything can happen, guys, in the markets. But, at this point, we shouldn't be surprised if one of those things that could happen is that the market could be several hundred points. The S&P 500 could potentially be several hundred points higher at the end of 2021 than where we sit right now. So that is definitely within the cards. Only time will tell, but right now it looks like, based on the technicals, it looks like the worst of this downturn and this downturn itself is behind us. And for right now, we have a new all-time weekly closing high, daily closing high, and intraday high as of this week. Now let me share with you what subscribers are saying about Simple Market Signals. First, we are going to hear from KT from Michigan. I have been trading for many years. I did not realize that I have been trading in a completely blind fashion. SMS has given me the direction, literally, I've been desperately needing. This service allows you to clearly see what the market is doing. If you are remotely serious about trading or investing, you must try this service. Again, that's from KT from Michigan. KT, thank you. I appreciate that feedback. Next, we're going to hear from Rich A. from Ohio. Hi, Rodney. I want to thank you for creating Simple Market Signals and making it available to the average investor like myself. I work hard for the money that I invest, and I want to try to get the best return for my investment. Like a lot of people, though, I just don't have the time to watch the markets closely, and have been blindsided a few times in the past by market moves I didn't see coming. Needless to say, if I could have avoided those downturns, I would be much further ahead financially. This is where Simple Market Signals comes in. It takes complex market data and distills it down into an easy-to-use tool that anyone can use to see where the markets have been and are likely to go. It is sort of like a barometer that a weather forecaster uses, only easier to use. I like the fact that I get weekly updates from Simple Market Signals and also get updates anytime there are important changes in the markets. Your emails are succinct and to the point, and the signals are easy to understand. Depending on how much time I have, I can quickly scan the main points that Simple Market Signals gives me or do a deeper dive and read about the various market sectors and their performance outlook. Either way, I get the timely and important information I need. Thank you again for doing this and keep up the good work. Again, that's from Rich A. from Ohio. Rich, thank you so much for the feedback. I really appreciate that. Next, we're going to hear from SC from Florida. And SC writes, I manage my own money and I am not a professional, which could lead to a disastrous outcome as it has for many. Simple Market Signals is the equivalent of having a personal money manager that keeps you invested when it counts and alerts you to the potential dangers ahead. Now, I want to point out here, guys, I used to be a money manager. I sold my practice in 2016. So these are the exact words that SC from Florida wrote to me. So I just printed it as is. But I want you to understand, I cannot give advice, but this is the feedback that SC from Florida gave me. So I appreciate this. So again, SC writes that Simple Market Signals helps you stay invested when it counts and alerts you to the potential dangers ahead. The service is extremely affordable and takes the uncertainty and fear out of being in control of your own investments. I have done very well using this system and consider myself lucky that Rodney's YouTube channel came into view one day. I highly recommend this to anyone who desires an easy system to produce positive returns in the markets. Again, that's from SC from Florida, sent from his iPad. And guys, I want to point out the reason I'm using just the first and last initials is for the security of my subscribers, okay? I have hedge fund managers, very well off, multi-millionaire clients. I have, people that are high up in various areas of the government. I have people from all walks of life. So just out of respect and security for my clients, this is the way that I'm presenting the information, just with their first and last initials as well as their state. Next, we're going to hear from FS from Massachusetts. Rodney is spot on in his reading of the markets. I was looking for a heads up to help me choose which side to use for vertical spreads. Again, that's from FS from Mass, and thank you so much, FS. I appreciate that. Next, we're going to hear from JV from New York. Now, I posed a few questions to my subscribers a few weeks ago, and this is the feedback exactly that JV from New York gave me with respect to the questions. So I produced it just as he wrote it. So the first question, what do you like best about Simple Market Signals? What JV said was, one of the things I like best about Simple Market Signals is that I have an easy-to-use tool at my disposal. I use the green, yellow, and red signals along with the general trend to help me determine how much equity risk exposure I want my investments to have in the market at any one time. I will either increase or decrease my equity exposure based on those metrics. The next question, what is important about Simple Market Signals to you? JV writes, I am a conservative investor. My main goal is to preserve as much capital as possible during market downturns, yellow and red signals, and to optimize my returns during green light conditions. The next question, how has Simple Market Signals helped you? JV writes, SMS helps me to determine whether to stay the course, increase equity exposure, or take defensive positions. For example, I will add additional funds to my equity investments during green conditions and move money to cash during red conditions. And the last question, how have you benefited from Simple Market Signals? JV writes, one of the benefits of SMS is that it has reduced the stress from always looking at and analyzing market conditions and worrying about it on a daily basis. And again, this is from JV from New York. JV, thank you so much for the feedback. I really appreciate that. Would you like the advantage of knowing when it's generally safest and most profitable to be in equities, and when it's most dangerous and generally least profitable to be in equities? To learn more, go to simplemarketsignals.com and watch this video that's on our homepage. Want more charts? Want access to proprietary market information? Want to minimize the likelihood you will experience catastrophic losses in the market? To learn more, go to simplemarketsignals.com and watch this video that's on our homepage. Again, that website is simplemarketsignals.com, and I will also leave a link to this site in the description box below this video.